Thanks, Haseeb. Thanks for doing this. Welcome to Crypto Town, Denver edition here. So I'm personally super excited about this particular episode because usually the format is that I cover stories of different people in crypto, right? And your life journey or your story is much like a movie, right? Where
is it?
Yeah, it's like a teenage boy who's starring, right? Who's the hero, grinds his way up to the top super early, right? Super young. Gets success, gets fame, gets money, and then there's a few setbacks. Right after that, rebuilds himself. It's like a montage of that action movie where the hero is training himself, right, and then goes back to the top. And yeah, now it's like you've seen everything, right? So you've been a professional poker player at the age of 19.
That's right.
You grew up the ranks really quick. You then left all of that, right? You then became a mental coach, right? You became
people don't usually cover that part, but yeah, you've done your research.
Right, and then you were an Amazon best-selling author for a while. After that, you decided to become a tech entrepreneur, right? You decided to learn coding and then tech entrepreneur, and then now you're an investor, right? So it's been quite a journey. So I want to dive everything, I want to cover every aspect. So tell me, who is Haseeb and what's his story?
That's funny. When you frame it as a movie and as a montage, it's obviously flattering, but also very alien to think about yourself that way, because maybe in retrospect you might wish that your life would feel like a montage, but you kind of can't think about yourself that way, because the reality is that at any given moment throughout all the different chapters of my life, I was just trying to find what should I be doing in order to actually be valuable to the world and actually fulfill some kind of purpose. And from any given year to the next, it's not okay, how do I create this amazing pastiche of a rock star, superhero, or whatever. Not that I think I've fulfilled that, but yeah, it's really just thinking one step at a time. When I was learning how to code, all I was focused on was learning how to code. When I was building a startup, all I was focused on was building a startup. And now as an investor, all I'm focused on is how to be a great investor. And if I can say there's one through line, or I guess one arc that's defined most of the different chapters of my life, it's that when I was young, especially being a professional poker player, poker is kind of the quintessential solitary activity, right? Now, obviously, poker is a game you play with other people, so that might be weird to describe it that way. But poker is a game where it's in a sense it's a single player game, because you are only playing for yourself, and you are trying to take the money from everybody who's sitting at the poker table with you.
Right.
So it's fundamentally adversarial with the people around you. And the other thing about poker is that nobody's on your side. Nobody wants you to win. Actually, everybody wants you to lose. Everybody who's at the table with you wants you to lose.
Right.
Venture capital, and I feel that over the course of my career, I've seen this transition in myself and how it's affected my own personality and just my lived experience, is that venture capital is the quintessential team sport. In that, in venture capital, you win when you make other people win. You make a founder's company successful. You find the right person, you help cultivate them and give them resources and support them. And of course, venture capital, you can't really do it solo.
Right.
You have to pull together a firm and raise a team and become a leader and help other people, mentor them and make them successful in order for yourself to become successful. And so if there's any learning I'll have, it's that if you chart the course of my career, I think that the stuff that I've done later on in my career has really been the stuff that actually has made me the most happy. And it's kind of obvious. It's ancient Greeks knew this, is that fundamentally human beings flourish when they are doing things for other people.
Right.
And despite the fact that playing poker is very lucrative, or at least it was, when I was playing it, it's nowhere near as psychologically salutary as doing something that makes money through lifting other people up.
Right. So we're going to go chronologically, right?
Okay.
So where did you grow up?
So I grew up in Texas. I was born in College Station, Texas.
Okay.
Moved around, but mostly lived in the periphery of Austin.
Okay.
Yeah.
And where's your family from?
My family's from Pakistan.
Okay.
They immigrated here in the early 80s.
Okay.
And I'm the second of three sons.
Okay. So at 16 is when you found poker, right?
That's
because
right.
your friends introduced you and you're like, okay, this is a good challenge that I want to take up, right?
Yeah.
how does a teenager boy like grow up the ranks starts from $50, right? Grows it to 200, then 100,000, and then by the end you had like $2 million in revenue, right? Like in earnings, right? And then at the end, like at the top of it, you decided to quit, right? Walk us down through that journey briefly, if you can.
Okay, briefly. So I started, I wasn't somebody who grew up around gambling. Right? Obviously, my parents are very religious. They're Muslim immigrants, and so gambling was something that just was never on my radar. Right. So the most poker I ever played, I remember playing 5-card stud with my cousins, without money. And so when I first was introduced to poker, I just knew absolutely nothing, completely alien to me. And I remember playing a game with some friends, and I immediately lost all my money. I didn't know not money, chips. I didn't know what calling was, I didn't know what checking was, I didn't know what, I didn't understand any of the terms, and I was so embarrassed that I was, as a teenage boy will be, that I was like, oh, I'm not cool, I should go learn, how to play poker. And when I started learning about it, I learned that there was this generation of poker players that were these young dudes, mostly dudes, who were, in college, and they were studying, statistics and game theory and all these different mathematical concepts in order to become some of the best new generation of poker players in the world. And I thought, that's really cool. That sounds like a video game, and like, I bet I could do that. And so I remember I got my start actually because I was underage, so I couldn't legally play poker. And so this is in the early days of Google image search. And so I remember I Googled an image of a driver's license because there was a website at the time that was running a promotion that if you scan your driver's license, they'd give you $25 for free to get you to start gambling, right? You had to like earn your way up by earning it out. And so I found the first image of some little old lady from Maryland who had an uncensored driver's license, sent that in, and that was the only $25 that I've ever deposited into a poker site. And so I started playing the 5-cent, 10-cent games, the 10-cent, 25-cent games. That was all the money I had, so I couldn't lose it. And so I was slowly grinding my way up, game by game, until by the summer I turned $25 into $4,000, and then by the end of the first year I turned it into $100,000. And then I told my dad. And obviously that was a very harrowing, probably the scariest part of that was telling my parents. But eventually they were like, oh, okay, well, shit, because I was making more money than my parents were. And of course I was underage, I was still going to school, and so it was a crazy time. And that ended up becoming my adolescence. Was my upbringing, really the way that I think about it was at a poker table and in the game of poker. And it's incredible education. Because it just teaches you so much about risk and decision making and mental composure. There's all these skills that I think are incredibly valuable that a poker table teaches you. But it's also incredibly psychologically challenging. It's very isolating. It's very, it sort of takes you off the beaten path, right? Because if you think about all my friends who are these promising young minds who are going into law or medicine, or they're going into technology or whatever, and I was basically like, I dropped out of college at 19 because I was making so much money as a poker player that basically I was just a college dropout. And I studied philosophy and English in school, something totally non-technical, because I was like, why would I study something technical? I'm like making money as a poker player. Like, what does this stuff matter? And so I was very lost. I was very unhappy. And then the thing you mentioned of sort of my fall from grace in the poker world came to a head in this scandal that arose when there was this guy who was a student of mine who ended up cheating a bunch of his friends. And because this guy, he was kind of under my wing, I tried to protect him. And I told people, hey, I think we should resolve this privately. We should have him pay you back, and not tell everybody that this guy cheated. And this scandal ended up blowing up, becoming this huge thing, and it became very clear that I protected him, and that destroyed my reputation in the crypto world. And I was 20 at the time, and so I was way too young to have any instincts about what does one do when something like this happens. And it was one of the most painful things in my life, because that was my entire identity, was just being a poker player. It was all I'd ever done. It was the only thing I was good at. It was the only thing anyone ever valued from me as a human being. And feeling that suddenly get stripped away from me, it taught me so much about the importance of honesty. You know, like I was so afraid, and I was like, oh, if people find this out, it's going to be terrible for me. It's going to be terrible for this guy. It's going to be terrible for everybody who's around us. And that's been a huge lesson for me. And the other thing that it really taught me was self-reliance. Because after that episode, I was just like, okay, you know, I was already disillusioned with poker. You know, I knew that I wasn't somebody who wanted to be a poker player for the rest of my life. And so it forced me to leave all of that behind and to go and try to create like a real identity for myself and a real goal of what I wanted to do, who I wanted to be, away from the thing that I had made money from.
Right.
And so when I quit poker, I was just, like I said, I was just a college dropout.
Yeah.
And I had this immensely difficult period of searching to try to find out what I wanted to do with my life and what motivated me and what I really wanted as a human being. And that's a big part of the reason why I gave away a lot of the money that I made as a poker player. Started over with $10,000 and realized that the only way that I was going to become anybody was if I had to, was if I had no other option but to become somebody.
Right.
And so I gave away my money. I wrote that book, gave away my money, and then started over, deciding that eventually that I wanted to go into the tech industry.
Got it. We're going to take a breather here, right? Just a second.
Yes.
So let's say, what were the 3 things that you learned from poker that now you find valuable as a VC? And how can founders also like apply these things in like building a company, right?
Yeah. It's interesting because poker, I actually feel like poker is very analogous to trading, but it's actually quite disanalogous to venture for some of the reasons I mentioned earlier. But there are some things that I think are universal skills that you learn from poker. One of these universal skills is thinking probabilistically. In poker, you never tell yourself, oh, this person, I can look into their eyes and I see they have Jack 10. You don't do that, right? What you do is you say, okay, you look at this person, you take in all the information and you say, they can have Jack 10, or they could have had Queen 9, or they could have a flush draw. And it's probably 20% this, 30% that. Like, this is the way that if you become a really robust, really developed poker player, you start thinking in terms of what are called ranges. You start thinking probabilistically. And as you get better and better at the skill, you realize that actually this is kind of universal. Almost everything, if you're thinking about it clearly, you should be thinking probabilistically. Nothing is certain, or nothing is 100% or 0% to happen. Most things are somewhere in between. And if you can't process a probability distribution when you're thinking about how to make a decision, then you're just going to make bad decisions.
Right.
Because the world isn't clearly divided into this will happen and this will not happen. So that's thing number one. Thing number two, and this is one thing that I realize that so many people are bad at, especially when it comes to their own careers, is not thinking clearly about downsides. So, you know, in poker, sometimes you make a call and you might lose. Sometimes you go all in and you might lose all your money. And the only question is not did I win or did I lose? The question is what were the odds when I went into this decision, right? So if I lose, how much would I have lost? If I win, how much would I win? If you're not asking yourself that question and you're just asking what is the probability that I lose, then again, you're making a very deep fundamental mistake. And this is something that I notice a lot of people only think about the probability that they'll fuck up, the probability of some kind of downside scenario. And they don't think, one, how bad is that downside? And two, like how good is the upside if I'm right? Right. And those should always be incorporated into your decision making. So a lot of people, they think, oh, you know, I shouldn't start a startup. Why not? Well, because, you know, what if startup fails? Startup is very likely to fail. So, okay, well, what if it succeeds? Like, how good is the upside if it succeeds? And second, okay, let's say it does fail. What actually happens if your startup fails? Well, you know, let's say you have, you know, you do BD at some tech company. You build a startup. The startup fails. Well, you got paid because you raised money, some seed round or something for your startup, or pre-seed for your startup. So you weren't making nothing. You're making less than you were at your tech company, but you're not making nothing. And then, you know, a year and a half later, the startup fails. You go back to your tech company, you say, hey, I need a job. They'll probably still hire you. Why not? You're still experienced. You actually have a year and a half more of experience. Maybe they'll even give you a raise because they're like, oh, you built a startup. That's like pretty cool. But like the downside is like, oh, you know, maybe it's like what, half a year of earnings that you lost or something like that at the end of the day. So if you really clearly see the downside, it's not that bad. Right? And so really that should make you very likely to start a startup if you see that clearly. But so many people are just like, oh, well, it's probably going to fail and I leave my cushy tech job and it's going to be, you know, really risky for me. So it's being able to see clearly how much can I win, how much can I lose, is a huge, huge skill that every poker player trains on every single day. And most people just aren't training themselves to think that way. The last thing I'd say, if you force me to do three, the third is emotional resilience, right? Is that poker is full of ups and downs. There's a lot of volatility, there's a lot of swings, and at the end of the day, even though you're making the right decision, it doesn't necessarily mean you're going to win, because poker is a game partially of skill, partially of luck. And so every poker player has had the experience of going through long downtrends, right? Long periods where I'm playing my cards well, I'm making good decisions, but the luck is just going against me. And you have to be able to push through that and not let it affect your psychology, not let it affect your thinking. This is a very difficult skill for most people, because most people select their lives to be in such a way that they're basically never getting negative feedback, or they're almost never getting negative feedback. Most people try everything they can to remove all luck from their lives. People actually spend a lot of money just to remove the luck from their lives, regardless of how much impact that luck has, right? People will buy, a warranty on a, $50 trinket, just because if something goes wrong, I don't want to ever feel like anything bad ever happened. And this kind of mentality makes people very fragile with respect to their ability to go do things that are risky. And this is a big part of the reason why things that involve some degree of risk, like starting a startup, like owning your own business, like going in the stock market, going into crypto, these things that involve fundamental amounts of risk, that's why they have such high payoffs. Right? Why should it be that the payoffs are so high? The answer is because most people won't do it. Most people just refuse to do it. They refuse to incorporate any amount of risk into their lives. And the thing is, if you have enough risks, and those risks are diverse enough, the reality is that, I might lose money here, I might lose money here, I might lose money here, but I'll make money over there, make money over there, make money over there. And if you average it all out, in the long run, you'll be fine. And you can architect your life in such a way that you will be fine. Or you can make sure that you have a nest egg or a cushion, such that even if everything goes wrong, look, I'll still be okay. I'll still have a house over my head, I still have my family, I'm not going to literally die if things go wrong, or I'm not going to, eternally torch my reputation if things go wrong. And so what you see, we're both in this industry for a reason, is that we both fundamentally accepted that this industry is volatile as hell. It's risky, there's crazy ups and downs. Sometimes we look like geniuses, sometimes we look like morons. But
we're on the moronic side.
Right now we're on the moronic side. But that's why the rewards for being right in crypto are so high. And if that wasn't true, if everyone knew that crypto was going to win, if it was already basically baked into the bread that crypto was done, then you wouldn't be making this kind of potential outcomes.
Right. So you mentioned poker is a probabilistic game, right?
Yeah.
But at the same time, it's also like a psychological game, right? You have to read the other person, right?
Yeah.
What are some psychological tricks or lessons or insights? Let's put it down to one or two, right? That you've picked up and that founders could really use when they're dealing with let's say VCs or making deals, right?
Yeah. Honestly, I'm very I'm recoiling from this question because I think most of poker is quintessentially adversarial. It's like purely zero sum between you and me, and I'm trying to outsmart you and take your money, right? These kinds of situations actually almost never show up in real life. Poker, I think, is a very, very bad model for thinking about how to do business in that sense, because for the most part, the best negotiators, the best people who create deals, and actually, I negotiate all the time because I'm an investor. The best deals and the best negotiations do not come from adversaries. They come from friends.
Right.
They come from people who trust each other and have built some kind of foundation of connection. And so there are times when, for example, you and I are fighting over a customer, or we both have the same business, or we're competing over market share. Yeah, there are situations where there really is this zero-sum contest between two parties, and it's just a question of you're haggling with some guy at a store you'll never see again, and okay, that's really just this moment, zero sum. You take more, I take less. That's it, and then we're done. But almost never is that where you make your money as an investor. Right? You make your money as an investor by understanding who the other person is, what they value, what they care about. And the thing is, when you're at a poker table, you know what they want. They want money. They want to make more money. They want more chips. So you don't need to ever ask yourself, what does this person want? But when you're in a business dealing, you actually don't know what they want. And the first and foremost thing, and I was just in a negotiation over an M&A transaction, that this was precisely the mistake that the founders were making that I had to counsel them against, is the most important thing is to actually understand the person who's sitting across the table from you and to build trust with them. Because if they don't trust you, they're not going to actually tell you what they think. So the first and foremost thing is to build trust, understand what they think, and make sure they understand what you think. Make sure they understand what you value. And once you're there, then the essence of being a great negotiator or a great deal maker is to understand how can both of us get more of what each of us value in a creative way that's not obvious if we're thinking about it as a zero-sum way, right? So, okay, you care about dilution, I care about valuation. Well, okay, well then we can do lower dilution or lower valuation, less dilution. Or really what you care about is something else entirely. What you care about is something else I can promise you. It's easy for me to give, but it's hard for you to give this. Or maybe there's a structure we can come up with that gives me this what I want now, but gives you some of what you want later, and we can use this as leverage in the next round to get this. If you're not thinking this way, if you're just thinking, oh, well, you know, it's me against you and we're sitting heads up at a poker table and I gotta stare into your eyes and like break you, then you're a terrible negotiator. You're gonna do terrible at actually getting good deals from founders or as a BD person from projects, right? It's no different.
Right.
Is that it's always like the only way that you're gonna be good in business is if you are building alliances and making people feel better off for having worked with you.
Right.
But if everyone's experience with you is like, wow, Haseeb, he's such a, you know, such a cutthroat negotiator, like it's so hard to get anything from him, then people aren't gonna wanna work with me.
Right.
Right? That's the opposite of what you want as an investor.
I'm glad you explained this point and like just went deep on this, because I was going to cover the negotiation part, right? Because you've actively covered it in your blogs, right?
I
and
have,
you've
yes,
like,
yes,
and
that's
you
right.
wrote an entire like essay about how to negotiate better when you're trying to land a job, right?
Yeah.
Now that article was like 10 years ago for a Web2 industry.
That's
if
right.
you were to rewrite that for crypto in today's day and age, what would that look like?
Honestly, I think it's completely the same. I think the principles of negotiation have nothing to do with the content.
Yeah,
what
what I meant was like the principles stay same,
Yeah.
but for example, how do you go around the side doors? Like, for example, for Web2, you had like different, like you make friends, you put referrals and stuff like that.
Yeah, yeah.
That's there in all industries, right?
That's
But
right.
like if you were to make something for crypto specifically, for people who are trying to like find jobs in crypto,
Yeah.
or like for founders who are trying to get into like the right circles on like the right tables, right?
Yeah.
What would you say?
All right, so if your goal is that you want to break in, I'd say the number one thing is that most people are not creative enough in the ways that they think about how they're going to break into an industry or into a particular person or a particular meeting that they want or whatever. So let me give you an example. I was chatting with somebody a little while ago that was telling me that they were. Well, actually, let me change the example because I actually don't. I shouldn't de-anonymize this person. So let's say you want to work at a company, okay, and let's say you want to work at Dragonfly, right? Just to give an example. If you want to work at Dragonfly, one of the obvious things you can do is okay, wait till there's a job posting, and then you go apply to the job posting, and you write some big thing. Okay, well that's the front door, right? That's very obvious.
Yeah.
Okay, so let's say you read this blog post, you're like, oh, okay, what about the side door? How do I get into the side door? Maybe you think the side door is, oh, I find somebody who's like a friend, and that person knows somebody at Dragonfly, and I go get an intro. Okay, and then I go through the interview process. That's okay. I mean, yeah, that's better. You're probably more likely to get an interview if you go in through a referral than if you go in through the front door. But that's still not actually that creative, right? That's still really not going above and beyond. So what would it mean if you were like, I really fucking want to work at Dragonfly? How would you do that? Well, to me, one of the obvious things is, the number one thing that I'm looking for is not somebody who can do an interview.
Right.
What I'm looking for is somebody who can do the job. Now, how do I know that you're somebody who can do the job? The answer is not, what a lot of people think like, oh, you know what I should do? I should email the Dragonfly guys and tell them I'll work for free. I'll do anything to learn from you. It's like, well, I don't need free interns, right? Like that's not going to help me. Actually, it's going to slow me down. If instead you send me an analysis of my portfolio and you tell me what are the worst deals and the best deals in my portfolio and why, that's the job. That's not applying for that's the job. That's what we do at Dragonfly, is we try to decide what are we doing well, what are we doing poorly, and how do we do better at it, right? If somebody did that, I would be like, holy shit, now that's a lot of work,
Yeah.
right? But is it that much more work than like going and networking and finding all these people and getting in some side door? In absolute hours you'll spend, it's actually not that much more time. But it shows a kind of confidence and initiative and it shows that like, oh, I can immediately evaluate, does this person have the intellectual perspective that's going to be valuable to me at Dragonfly, right? If someone wants to say, how do I become an investor? The answer is invest. That's how you become an investor, right? I want to hire somebody who knows how to invest. I don't want to hire somebody who I can maybe teach how to invest. So now you might say, like, well, I'm not a VC. How am I going to invest? The answer is like, go invest in your friends. Go find your way to like somebody who's raising a startup. Everybody who's starting a company in crypto, they post some big tweet storm, it's like, oh, I'm going on my magical journey, I'm doing this thing. Okay, go cold DM them and go be valuable to them. And if you go be valuable to them, and then you tell them like, look, I want to invest, and you say, okay, well, how much can you invest? I'll invest $500, right? If you go do something valuable for them, maybe they'll take your $500, right? Maybe it's all the money you have. Like, you do that 5 times, boom, you're an investor.
Right.
And now you have a resume, and you come bring it to an investor, and you say, look, I did this with my, I spent $2,500 investing into a bunch of random startups.
Right.
And I would be so much more impressed with that person than I'd be impressed with somebody who, gets in some cool intro or whatever. But nobody does that, right? If you're applying to a company, and you come in, and you have a business case that you've developed of like why this company's core product sucks, and why they should do the strategic, modulation of their strategy. Nobody does that. Nobody does that. But I guarantee you, if you're a CEO and you're interviewing people, that's the only thing you care about is what am I doing wrong? And nobody will tell you. Nobody will give you any of that feedback. Everyone's too afraid to tell you what they think.
Right.
So that's my answer. If you really want to go through, like not just go through the side door, but what's the line?
Break through the window.
Break through the window, bang on the window 100 times, break in through the kitchen, sneak in through the corridor, hide in the pantry. That's the way you do it.
Just do the job.
Just do the job.
Got it. That's a great answer. Backtracking, right? So now this is like 2015 and you want to suddenly become a software developer, right? You want to get into the tech industry, right?
Yeah.
You have no idea about how to code, so you start
at
from
all.
scratch. You've applied to like coding boot camps, right? You get into App Academy, you learn for 3 months, then you become an instructor there, then you become director of product, right?
Yeah.
What I'm seeing here is across your life, there's a pattern of learning, right? And you've broken down as well pretty well in the hard things about like learning hard things, right? But let's say you've broken down and you've said that there's art and science to learning, right?
Yeah.
If the learning is structured, it's science, and if it's unstructured, it's art. And life is often unstructured, right?
That's right.
Can you break down the art of learning for us?
So, as you mentioned, there's 2 domains that you have to treat very differently. There's structured learning and unstructured learning. Structured learning is in domains that there's already a very well-developed curriculum of how you learn this thing. So if you want to learn calculus, you don't learn calculus by going and exploring and meeting people and whatever and joining meetup groups, right? That's not how you learn calculus. You just go, there's a textbook, there's a whole system, and if you do that system, you will learn calculus, right? There are many things for which this is true, and when I first got into crypto was very unstructured. There was no curriculum, there were no textbooks, there were no classes. That's not true anymore, right? It's 8 years later. There is a lot of material that actually is very structured that you can go through to learn the fundamentals of crypto. And it's important to understand the difference between those 2. If you're going into a structured domain where there is already this very robust curriculum, do not waste your time doing any other bullshit. The answer is sit down, study every single day, go through the material, actually do it by hand. Don't just watch things and think you learn things, because that's bullshit. That's not how learning works. Learning happens through doing and through active recall and through, there's a sort of hierarchy of learning. The first thing is, there's this saying I think in paramedicine, which is the way you teach somebody how to do something is see one, do one, teach one. Which is you see someone tying a tourniquet. First you see it, then you do it yourself, and then you teach someone else how to do it, right? And it comports with this hierarchy of learning, which is that if you just see something, that's a very, very poor form of learning. It's very low retention. If you read something, okay, maybe that's a little bit higher or something. If you talk about something, okay, that's higher. If you recall something and you say it yourself, you recall the whole thing, that's even higher. And if you teach something, that's the highest, okay? So generally speaking, what I advocate is that you want to be climbing up this hierarchy and having more multimodal ways of interacting with learning when you're doing something like this structured. Now, if you're unstructured learning, right, and this is okay, how do you learn, what's going on with AI agents?
Right.
Okay, that's totally new. People just came up with this bullshit 2 years ago, right?
Right.
So there's no classes, there's no textbooks, there's no anything. There's just a bunch of papers, talks, meetup groups, just things happening on Twitter. And so, okay, how do you learn this? Well, there's a few things that you have to do in order to learn something that's unstructured. So one, you kind of have to create a curriculum for yourself, right? And that curriculum is not going to be okay, well, here's the quizzes, here's the answer key, here's the key learnings, right? You kind of have to figure out, okay, what is the grand tour of material that I'm going to come up with? 2, you need to immerse yourself. You need to immerse yourself completely, which is just put yourself into this domain and ingest it, just swim in it. You know, it's like you move to a new country. Like the best way to learn the language is not to like, do Pimsleur classes and listen to audiobooks. The best way is just to go out and be around people, and your brain is a sponge. When you have to learn something, not when you want to learn something, but when you have to learn something, your brain is very, very, very good at learning it. But when you want to learn something, your brain kind of sucks. Your brain's lazy. You know, your brain doesn't. Your brain expends a lot of calories. It doesn't want to do things unless it has to. So if you know that, look, I need to learn how to run as fast as I can because I'm in a dangerous place, your body will learn how to run, right? But if you go to a treadmill, you're like, oh, I want to run. You know, it'd be nice if I could maybe do a marathon someday. Yeah, okay, you're never going to run a marathon if that's your attitude. Right. So that kind of immersion is fundamental, and it has to be, again, multimodal, right? So you want to be reading everything that you can. You want to listen to things that you can. You want to watch talks that you can. You want to go to meetups. You want to surround yourself with people. You want to talk to them, force them to talk to you. You know, for a lot of these things, like, okay, well, I don't know anything about AI agents. Why is anyone going to talk to me? And to me, it's a little bit like, when I was a poker player and I was just coming up in poker, I didn't know anything about poker. I was just some random fucking kid. Why did anyone want to talk to me about poker? But the way that, back in those days, again, before they had the textbooks and all the structured content that today, much, much more robust than when I started playing poker, the thing you have to do is just force people to listen to you. Just, I was the most annoying kid when I was a poker player.
Ask the third question.
Yeah, exactly. Ask the third question. It was that I would not shut up until I understood. And I would, a lot of people would be like, man, this Haseeb kid is so fucking annoying. Like, I just can't stand him.
Yeah.
And those people, fine. But the people who put up with me, they're the people who I learned from. They're the people who tested my ideas and helped me to really develop a strong foundation. And the same thing in crypto, right? When I came into crypto, I didn't know anything. I started from the same place everyone else started. But by finding people who I could bounce ideas off of and really just, people who knew more than me. And once you know more than the people around you, that's a sign that, okay, it's time to challenge yourself again and find a new set of people who know more than you. Once you're the smartest person in the room, that means that you're in the wrong room. And it's time to go revisit where you think you're supposed to be with respect to what your goals are.
Right. Thanks for that. It was like reading the blog, but like in person, right?
I'm glad to hear that.
Yeah. So now we'll skip the Airbnb days, right? And we'll dive right into crypto, right? So how did you find crypto?
So I first learned about crypto actually from a lot of my ex-poker player friends.
Okay.
So in 2011, which was around the time that I quit poker, there was this big DOJ effort to shut down a lot of overseas poker sites that were serving American users. And because of that, a lot of online poker kind of went underground or went overseas. But there were still a lot of Americans who wanted to play poker. And the way that they would play poker after all those overseas sites could stop taking US bank account transfers is they would start gambling and settling their poker debts in Bitcoin. And that's how I first learned about Bitcoin. This was like doing it 2013, 2014. It started getting quite popular. And so, but at that time I sort of thought of Bitcoin as like, oh, it's like a way to settle debts online. Or, it's kind of like side way to do, basically shady money transfers or something. I said, okay, fine. And so it wasn't until like 2016 that I really started paying attention to Bitcoin. And it was largely because of Trump getting elected. So when Trump got elected the first time, I thought, okay, how do you bet on the world getting totally destabilized?
Crime is legal.
Exactly.
Just like now.
Crime is legal. How do you bet on crime is legal? And the thesis was that, probably Bitcoin. And so that's when I first bought Bitcoin.
Okay.
It was 2016.
And you're still in Airbnb right now?
Yeah, I was still in Airbnb at that time. And then it was really going into 2017 with the ICO boom that I really started paying attention to Ethereum. And Ethereum was what fundamentally convinced me that what was happening in crypto was much bigger than just like, oh, okay, well, here's some like non-sovereign alternative to store of wealth. What's going on here now is that these people are fundamentally trying to rebuild the financial system. They're trying to rebuild the monetary system from the ground up. And I was working at the time at Airbnb on payments fraud. And I didn't know anything about payments before I started working at Airbnb. And when you work on payments, especially international payments, Airbnb, people are paying each other in like 60, 70 countries around the world, right? And so you deal with all these different payment systems. And what you realize as an engineer is that these systems are all totally fucking broken. They're all so old. They were all made in like the 60s and 70s, and none of them are designed for the world that we live in today, which is 24/7, global, digital first, right? It's completely interconnected. That's not the world into which these things were originally created.
Right.
And so I realized that what is happening in this space is going to change the future of money. Right? There's just no way that the way that we did money in 1970 is the way that we're going to do money in the year 2070. Right? There's just no way. And that what happens in crypto is going to have some role to play in that story. Now, I'm not like a Bitcoin maxi or a crypto maxi, period. I'm not somebody who thinks, oh, we're all going to be paying each other in Bitcoin or Ether or whatever. But I do believe that very clearly the ideas that were being created at that time were going to be enormously influential. And this was, I mean, saying this now sounds kind of mundane. It sounds kind of obvious. But like this was before CBDCs. This is before the Libra. This is before stablecoins. This is before, stablecoins were tiny at that time. Nobody talked about them. So it was really quite a weird thing to believe at that time. And it's been crazy in the time that I've been an investor that these things don't sound weird anymore. Actually, they sound like very normal. They sound very boring.
Right. So, and then how did you find earn.com? You joined earn.com, you worked with Balaji, right? Like, what is that story?
Yeah, so actually, I left Airbnb and I was thinking about what I wanted to do in crypto. And I was chatting with a bunch of people and I had some startup ideas. And I ended up meeting Balaji through, a friend of mine. And at the time, I realized I didn't know enough yet. And I wanted to work at a crypto company in order to really build my understanding of the space, Immersion. And I thought, okay, well, there were 3 companies I was talking to at the time that were the 3 biggest companies in the space, or most notable companies. The first one was Coinbase. I was applying as a senior software engineer. They ended up making me an offer. Talked to Consensus, which at the time was like the other really big company. And then I ended up meeting Balaji through a friend of mine. And Balaji convinced me, like, oh, why don't you come work with me at Earn? And Balaji was just such a, this is again before Balaji is the Balaji we think of now. He was still just kind of a more centrist, meek technologist than he is like now. He's like this kind of crazy firebrand guy. Yeah. But he was just so different than anybody I'd ever met. He was just so creative and generative, and he had such conviction on what was happening in crypto that when I talked to all these teams, like obviously a ton of respect for Coinbase and a lot of respect for Consensus as well, but Balaji just had such crazy ideas. That was like, this is the place where I'm going to learn the most about crypto. Yeah. And he basically said, look, come work with me for a few months. We're going to build some really cool stuff, and I don't ask you to spend any longer than that. And I was like, you know what, that's actually perfect. Because if I go join another company, I got to spend at least a year there. It's kind of it's kind of a bad look to join a traditional tech company for less than a year. That's what I thought I was going to do. Is I was just going to go join a Coinbase or a Consensus for a year, earn my stripes, learn a little bit, and then go build a startup. But Balaji was like, look, you can just come hang out with us for 3 months, and I was like, sold. Nice. And that's how I ended up at Earn.
Okay, so let's dive into Dragonfly then. Okay. So you're done with Metastable, right? You were an investor there. You worked with Naval, and now you've met Bo, right? Yeah. So how did Dragonfly start? Let's start with that.
How did Dragonfly start? So it's funny. So actually, I met Bo. He was actually a big LP in Metastable. That's how he and I first met. Okay. And so when I first got to know Dragonfly, so Dragonfly started before I joined. Okay. Most people think that I'm a co-founder of Dragonfly, but that's actually not true. I joined Dragonfly, the fund wasn't fully raised at the time that I joined, so it was still relatively early, but when I came into Dragonfly was actually not a known quantity. Dragonfly, most people in the US when they saw Dragonfly was like, oh, what is this like random Asian fund? Like what the fuck, Yeah. And I remember people at the time were telling me that I shouldn't join Dragonfly because it's like, you're bringing more to this firm than they're bringing to you. Why would you go join them? Because I was at I'd just been at Metastable. It was like a very well-respected, well-known firm, and I realized that Dragonfly, and specifically like my partnership with Bo. So a lot of people in the West don't know Bo, but Bo is a legendary venture capitalist in Asia. He's probably one of the most well-known and most kind of highly decorated VCs in Asia. And he was he's kind of like the Chris Dixon of Asia, in that he was an early investor into OKX, did their seed round, back at a time when, again, very few people in Asia were investing into crypto, and invested in most of the unicorns that have come out of that region. Right? Very, very dominant investor in this space. And when I got to know him, the thing that I realized is that Bo and I are very, very different, but both of us realized very quickly that each of us were very, very good at what we did. But what we did was very different from each other, right? Myself, like I'm a technologist. I'm a deep thinker. I'm kind of this, I have this sort of philosophical first principles view of how I think about things. Bo, he is a consummate investor's investor. He's somebody who can make friends with anybody in 5 minutes. He instantly builds trust with people. He's just like this, super connector, right? And he knows everybody and he can get into any room. And that's not me. That is absolutely not my skill set. And so I realized how much I could learn from him, and he realized how much he could learn from me. And we just realized, before I was kind of thinking that, okay, the person I should partner with is somebody who's very similar to me. Right. And the longer that I've done this, the more I realized what a mistake that would have been. Because it's kind of like, oh, well, you both have the same skill set. Why do you need each other if you can both do the same thing? It's really the asymmetry between two founders that makes for a great team. And I see that, of course, now in founding teams. It's the same thing, right? It's like very often technical founder, the business founder. Very, very common thing. And the same thing happened to be true, I think, for us at Dragonfly. And so when I came into Dragonfly, I sort of had an agreement with Bo that, okay, if I'm going to do this, if we're going to partner up together, then I want Dragonfly to be one of the most respected technical firms in crypto. And that means that, at that time, Dragonfly, that was not Dragonfly's DNA. Dragonfly was mostly following. Dragonfly never led a deal. It was, they invested some money into other funds and they were kind of like very diversified. And I was like, that ends. If I'm joining Dragonfly, Dragonfly's gonna be known as being a first principles, high conviction investor. We're gonna hire great technologists, and we're going to be leading deals and purely operating on our own convictions. And Bo was like, let's do it. And that's how Dragonfly ended up coming together. And when we first started, we were really nobodies. Right. I think people now look at Dragonfly like, oh wow, it's such a great firm. But when we started, we were just a few people in a little, basically working out of a WeWork. Right. And we had to beg and plead for getting allocation into deals because people were like, well, what are you going to do for me? I don't know who you are. It really is not until maybe 3 years ago that we started becoming known as one of the big players in this industry. Yeah. But from my perspective, what's made Dragonfly work? It's like, look, we're not, if you look at the other big firms in the space, they're kind of anointed. They come from these amazing backgrounds, they have all these resources, they have this pedigree, they have this brand. For us, we just kind of outworked other people. We just did more. We just worked harder. We wrote more, we thought more, we did everything in public, and I think for a lot of the people who've been investors in the space longer than we have, we out-executed. And that's, I think, part of the reason why founders trust us and why they want to work with us is because we just work our asses off. And part of it is that I don't have a life, so I just do this, right? So you even see, at Denver, how many other VCs are, running around giving talks, doing all these panels. Yeah. And it's like, I don't want to lose that because that's what got us here. Is that we don't get lazy. We just keep working and putting in the hours to make our entrepreneurs successful and to make Dragonfly a force for good in the industry.
Your last fund was like $650 million, right? And I think last year, September, there was a CoinDesk article of you guys planning to raise $500 million for the next fund, right? When you sit with an LP, right? I'm sure now Dragonfly, as you mentioned, everyone knows, etc. Right. In its early days, right? What was that process of raising funds from an LP like for you, when no one knew about Dragonfly?
Yeah, early days was very different because in the early days, especially if you think back 2018, 2019.
The only reason I'm asking you is, sorry to cut you off, is so that because when a founder is raising in an early stage startup, right? What can he learn from this experience?
Yeah. Well, so in the early days, it was mostly about pitching crypto as opposed to pitching us, right? Because most investors were not investing in crypto at all. Right. Think of most institutions, most family offices, they didn't, you have to sell them on crypto and then you're the gateway to crypto. Now today, 2025, that is not true at all, right? Almost everybody knows crypto. They maybe have some allocation if they own some Bitcoin, they own maybe a bit of Coinbase stock or MicroStrategy or something. And so you have to really convince them about you. And I'd say for myself, the number one thing that I have found that I think is a big part of the reason why some of my pitch resonates with LPs is that I exude competence. I understand the space extremely well, right? A lot of people, when they become managers of funds, they start abstracting themselves more and more from the details. And And so when they ask, oh, hey, tell me about this company, tell me about this trend, tell me about this thing going on over here. And they speak in high levels, they're just kind of, it's like a CNBC interview or something, and they're just like saying, oh, it's so bullish, crypto's gonna take over the world. It's like, yeah, people have heard that shit.
Yeah.
They don't need to hear that from you, right? What they want to hear is mastery. What they want to hear is that, wow, this person is so deep, they know so much about everything that they're running. And it's the same thing true when I see a founder. When I talk to a founder, what I want to see is not that you can tell us a big, compelling story. It's like, there's a lot of bullshit artists that can tell big, compelling stories, right? What I want to hear is clarity. What I want to hear is specificity. I want to hear that you know so much about this market you're going after that it would be crazy if you couldn't crack it. That's the kind of, not confidence, but competence that I want to see from a pitch. And I think the same thing is true for LPs talking to a GP.
Right. And my next question was going to be this, like, what are the 3 things that you look in a founder when you're investing, right? But you've already covered that sort of. Recently you tweeted that Notion documents over decks, right?
Yes.
Yeah. What's your stance on that? Like?
Yeah, I mean, this is something that I've been investing for such a long time now that a lot of startup decks, they all kind of copy each other. They all sort of do this rigmarole of, spend the first 5 slides kind of hyping yourself up and talking about how big crypto is and just, I don't know, this. Like the thing about decks is that they don't really enforce that much clarity. They don't force you to be very specific. They don't force you to put it into complete, clear sentences of like, what are you building? Why are you building it? What's your strategy? A lot of people use these like very confusing diagrams, like, oh yeah, this thing goes here and then this thing, and here's where the customer is, and da da da.
Yeah.
And I have to stare at this and just be like, what is this? What are you saying?
Yeah.
And so the nice thing about write-ups, and this is a trend that's probably started really since COVID, is when I started seeing this become more common, but now I just see it more and more, mostly from the highest caliber of founders, is that I think these write-ups, as opposed to pitch decks, write-ups just really, they force clarity. They just make it much easier for me to understand what you're doing and to communicate a lot more about how you think. And that's fundamentally what I care about, right? When I hear a pitch, I don't care how well you can read slides and like just regurgitate notes that you prepared earlier. I don't care about that. That's not a useful skill. What I care about is how you think. And the way I'm going to understand how you think is by probing you and getting you to be really clear and specific. And if you just do that up front, then great. We can save that time and I can find out other things about you when we actually go into the pitch. So that's why increasingly I've come to prefer like a Notion write-up than a pitch deck.
Got it. And you recently also said that markets hate step functions, right? So when you're talking about vesting schedules, why do you need like a 1-year cliff, right?
Yeah.
Can you double click on that? Because in the comments there was like a lot of like different answers as well, different like suggestions, whether it's like a KPI based unlock or stuff like that.
Yeah.
I think Tushar from Multicoin had that, right? So what is your stand on that?
I mean, my stance is very simple, is that I think your base assumption should be that when people are talking about unlocks, that this is a distraction, right? The fact that people are talking about, oh, there's this day where this thing happens and this day where that thing happens, and the team freaks out, the holders freak out, the market freaks out, traders freak out, this is a distraction. It is not good for these things to be inflection points that make us think about, oh, should I hedge, should I do this, should I sell my tokens now, should I not sell my tokens now? Markets hate step functions. They like things to be smooth and continuous because that makes everything predictable, and it means that nobody has to like get out of bed or like put dates on their calendar or whatever. They just have to think about how do I feel about this asset, and that's it. And so I think the fact that we have these norms around cliffs and monthly vesting and all these other things, I think they're just kind of they're mostly vestigial from being analogous to founder vesting. Right? When a founder starts a company and they have co-founders and the co-founders vest together, very often there's a 1-year cliff, and they have that 1-year cliff because they want to make sure that the other person doesn't leave before a year. And if they leave before a year, that's like the carrot to make sure they stay at least a year. Otherwise, they get nothing. Right? Okay, that makes sense. Why is that for investors? What does it mean for an investor to leave before a year? Right? That doesn't make any sense. So why do we do that? We do that because they made it the same as what the founders get, which is stupid, right? That doesn't make any sense. So all this stuff, like the reason why we have these is just somebody started doing it in 2017 and everybody copied them because everyone else copied them. And it's just norms of people copying each other through a long line. And I know, like, because I was there, I saw all this stuff happen and why these norms developed. And now there's this whole industry around token unlocks and all this shit that really should just go away. I mean, not that that information isn't useful, but it should be useful as a continuous stream of unlocks rather than as a, this date, this thing happens and you should be prepared to trade around it.
Got it.
That's my view.
Got it. As the managing partner of Dragonfly, what are the next few things that you're like really looking forward to in crypto? What kind of sectors are you like personally bullish on? And yeah, what kind of founders do you want yourself?
Yeah. By the way, I have to make this last question.
Yeah, this is the last question.
Okay, cool.
Yeah.
What am I personally bullish on? I think crypto is clearly in this place now where it's ready for mainstream adoption to open the door, right? With the end of the regulatory crusade against crypto, it's now the case that a lot more consumer-facing applications can start incorporating crypto into their products. And what's very clear is that they weren't allowed to. It's not that they didn't want to. Right? So if you think about, the Libra, right? Not the new Libra,
yeah.
but the Facebook Libra. I remember back in 2017, there was this the Google team within Google Play. Google Pay, not Google Play. The Google Pay team that was working on an Ethereum wallet in 2017. And if you went to an SF party, you could go and somebody who worked on that team would show you the demo. But it never got released because Google knew, and rightfully so, that they would have just been eviscerated by regulators if they had launched something like that. Well, the times have changed, right? Everybody wants a piece of this industry because they see how much money is being made, they see how big it is, they see how fast it's growing. And so I think that distribution that is basically going to be the big story for the next couple of years. And so when I look at just the blockchains themselves, like how are we going to create the infrastructure that can support tens of millions, hundreds of millions, or even billions of people coming on chain? Right now we're probably in the tens of millions, right? That's the most we can do. But getting to the hundreds of millions, we're not there yet. Stablecoins very clearly are going to proliferate, especially when we have stablecoin legislation coming this year. So all the infrastructure that undergirds this whole ecosystem, I think it's going to become really valuable as it facilitates a larger and larger economy that starts building out on top of itself. And the one history lesson that we get from crypto is that usually in crypto, it's startups that tend to win. Even though big players come into the space, right? Who's making all the money in crypto? Is it Coinbase or is it BlackRock? Well, it's Coinbase. BlackRock is big; they're in the space, but the amount of money they're making is nothing compared to what Coinbase is making. Is it JP Morgan with their private blockchains or whatever, or is it Solana? Right. Solana's making way more money than any bank that's launching a private blockchain is making. And so I think that story is going to continue, and that for me is the guiding light as an investor.
All right. Thank you so much, Haseeb. I think we're out of time, but this is like a gold mine of insights.
I'm glad
I'm glad you could do this.
Absolutely.
Thank you so much.
Thanks for having me.